So I don't know about you, but I don't want to spend my time looking at companies' earnings report, seeing where every single dollar came from. I like simple investing and I like making it easy. So I would rather invest over and over passively in the same 4 ETFs that will make me a millionaire. So today we're going over the only 4 ETFs that you need to hold for life and never sell. The first fund that you should buy and hold for life is VOO or VOO. This is a Vanguard S&P 500 index fund which invests in the top 500 companies in America. This fund tracks different types of companies in different sectors: telecommunications, techs, bankings, and so much more. And these are weighted by market cap, so the bigger the company, the bigger the portion in the fund they have. Apple, being the biggest publicly traded company in the world, sitting at $3 trillion, is the biggest holding in this VOO index fund, which falls at just over 7%. Next, you have Microsoft at 6% of the fund, Amazon at 3.3% of the fund, and Nvidia is at 2.7%. So you can see by investing in this one index fund, you get exposure to 500 amazing companies: Nvidia, Apple, Tesla, Microsoft, Netflix, and so many more. Since it's been created, the S&P 500 over its history has returned an annual average return of 10%. And of course, this isn't every single year. Sometimes you'll have up years, some years you have down years, but these average over the long term to 10%. But what's so powerful about the S&P 500 is it basically tracks the US economy. So over any 20-year period, we've never seen a negative return on the S&P 500. 20 years ago, the S&P 500 was lower, and you can look at any period in time and have that same result. Aside from the diversity within this fund and its good returns and its passive investing, it's very cheap to own. A lot of ETFs and funds have a high expense ratio of 1%, 1.5% that goes to the person managing that fund. But since VOO is passively managed, its expense ratio is just 0.03%. What that means for your wallet is on every $1,000, you're going to be charged 30 cents. And on top of all of this, there's of course a cherry on top, and that's the good dividends with VOO. VOO also has a 1.5% dividend, so you get paid out dividends to your pocket every single year just for holding the stock. And a lot of you guys are familiar with another index fund for the S&P 500, that's SPY. SPY and VOO are very similar, but each have their perks. SPY has higher liquidity, which means you can sell it and buy it easier, which is good for trading. But at the same time, it does have a higher expense ratio, which doesn't make it that good for long-term holding. On the other hand, VOO has a smaller expense ratio, so it's good for long-term holding, but not so much for swing trading or trading if you're looking to get in and out of that position really quick. The next fund that I plan on holding forever is QQQM, or the NASDAQ Index Fund. Just like the S&P 500, the NASDAQ 100 is market cap weighted, so the bigger companies have the bigger portions in these funds. The NASDAQ 100 will expose you to domestic and international companies. Unlike the S&P 500, the NASDAQ will not include financial sectors, so you will not see any banks in here. No Bank of America, no Chase, no Charles Schwab or anything like that. At one point, at its peak in 2021, we've seen a 100% return between the 2-year period of 2019 and 2021. But this isn't normal. On average, we can expect, or what we have seen in the past, is 15 to 17% annually. QQQM does have a sibling, QQQ, which is basically the same thing, but like SPY and VOO, QQQM is for the long-term holders, QQQ is for the day traders and the swing traders. QQQM has an expense ratio of 0.15, on the other hand QQQ has 0.2. The next fund that you should be holding forever is the Vanguard International Fund, or VXUS. Kind of ironic that it has US but it's international. But anyways, this is meant to diversify you out of the United States. Right now, the United States is probably the best economy in the world, but who knows what happens in the future. So this is a good way to hedge against your United States bets. Here you'll get exposure to many companies like Samsung, Louis Vuitton, Taiwan Semiconductors, and so many more. Historic returns on this fund are a bit lower than you'll see with the S&P 500 at around 5%. And this is exactly why I have this as a smaller portion of my portfolio. I want the majority of my portfolio in the United States because that's where the big companies are. On the bright side, this does have a very, very low expense ratio at 0.07%. And every $10,000 you have in this fund, you're going to be charged $7, which is barely anything. Now, the first 3 funds that I set to hold forever and become rich were based on appreciation. We saw 15% with the NASDAQ, saw 10% with VOO, and then the international one was a good hedge against the United States. But this last one is actually meant to put money in your pockets directly, and that's SCHD. What's good about this fund is you'll find a lot of dividend kings and dividend aristocrats, like Home Depot, Pepsi, Coca-Cola, Lowe's, and so many more. These are reliable companies companies that have been increasing their dividends for 25, 50 years consecutively every single quarter or every single year. That's what makes it so powerful in the dividend investing game. You can rely on these companies to pay out. Not only are you going to get a dividend from them, but on top of that, you will see appreciation. Right now, the dividend's sitting at 3.5%. So if you have $1,000 invested in the stock, every single year, you should expect about $35 returned to your pocket for just holding the fund. That's putting aside the appreciation that you're going to see. So this truly is one of the funds that you should hold forever because those dividends will only snowball. And another way to take advantage of this one specifically is putting it in your tax advantage accounts like a Roth or a 401k. Because they do pay out dividends, those dividends are taxed, but if you put them into one of these tax deferred accounts, you won't have to pay taxes on them, or you could just defer them till later on. You get paid out dividends in a normal brokerage account. Even if you don't pull it out, if you reinvest it, you're gonna have to pay taxes. On top of the 3% dividend that you get from this fund, since created in 2011, it's seen an 11% appreciation on average every single year, which is really up there with QQQM and VU, but VU has a longer track history. Some people choose to go SCHD, some people choose to go VU, but I say, why not both? And on top of this, it does have a very low expense ratio at 0.06%, or $6 on every $10,000 you have invested. With this fund specifically, the goal should be to reinvest those dividends and have that snowball grow so large that it pays your salary for you and you can become financially free. So combining these four funds, VU, QQQM, SCHD, and VXUS, with your retirement accounts or your tax advantage accounts, you should have an easy path to retiring a millionaire and gaining financial freedom. And on top of that, you can automate your investments so you can build passively without having to put time and effort into going into the app and buying these every single month. So these four funds are four funds that you should never sell, hold on forever, that can help you reach that financial freedom goal of yours. But make sure to be doing your due diligence and looking up any questions or suspicions that you have with these. And with that being said, guys, thank you so much for tuning in. Hit that subscribe button, hit that like button, share it to a friend, and we'll see you guys in the next one.